For more on the markets and where investors should turn, I want to bring in Ted Parrish. He's president and CIO at Parrish Capital. So, Ted, you look at this market. Let's look at it when you were last on. That's about 3 months ago. I feel like we're talking about a lot of the same problems. Sluggish GDP growth, mediocre earnings. Here we are in the middle of earnings season, but the market is up 5%. Why?
Well, I think investors have become a whole lot more resilient in terms of thick skin. I mean, we've been through a lot. We've had the Brexit. We've had GDP numbers that haven't hit. The estimates came in below. But there's always a silver lining. I guess the Fed's going to stay on the sideline, and, we're not just going to fall off of the cliff. So, the future looks brighter. I mean, because we haven't had the growth yet, because there's pent up growth there. And I think investors are looking forward to it. And on the other hand, when it comes to the market and the actual performance of the market, what's the alternative? I mean, you're going to buy a gold, you're going to buy bonds, and not going to get that much of a yield, or you can buy a high-yielding, high-quality U.S. company that pays a dividend that's growing. Yep. I mean, and it pays you while you wait.
So you're saying you got to be in it, but there are a number of people that we've heard from today at Goldman Sachs, Jeff Gundlach, saying maybe now's not the time to be putting more money on the table. So do you think that it is a good time to get into the market, or are you just telling people, what you bought, just buy and hold, just sit tight here?
Well, we operate under what we call a 3 to 5 year liquidity window. So the most aggressive investor needs to look 3 years out, the most conservative 5 years out. If you need the money within that window, it should be in liquid, high quality, fixed income securities. Outside of that, it should be invested in growth, meaning stocks. So we don't dictate, the short-term moves in the market doesn't dictate how we invest money. So we're always investing. We always invested in high quality. The most we'll do is make a modest allocation to something that we think is a little undervalued.
Given that you're looking, for growth, what sectors do you like?
A lot of them. I like consumer discretionaries. I like industrials, technology, healthcare, and I even like some companies in energy. I mean, I know energy is getting beat up right now, but we built a pretty good position in energy back in April. And it's done pretty well. I mean, the gentleman that was on with you earlier talked about technology doing well, but really energy has done well year to date, and also industrials. So we have great positions in those two sectors. What
do you like in energy? Because that certainly has people nervous here. What names specifically?
A large cap integrated company like a BP and a Royal Dutch. I mean, they've confirmed that their dividends are safe, and both are yielding above 5%. I mean, in this type of environment, those companies are going to buy assets and come out on the other side a whole lot more healthy.
And on the consumer discretionary front, I know we've talked about, I think, some fashion names with you before. You still think that that's a good play here?
Yeah, I mean, some of the companies I recommended have gotten beaten up. They miss earnings like Guess and also Skechers. But I like the two still because their balance sheets are pristine and they pay dividends, especially Guess. It pays a 6% dividend with virtually no debt. I think it's a great long-term holding.
All right, and anything you wouldn't touch with a 10-foot pole?
I'm skeptical of gold. I really am. I think that too many people are loading up into gold. Gold does nothing for you. It doesn't pay a dividend. It doesn't grow. You're just basically buying it based on fear. So I avoid gold. I mean, if you do want to put some money in gold, don't go above 5% in your portfolio, but I don't have any in ours right now.
All right, Ted Parrish, thanks so much.
Thanks for having me.